Bluestone makes investment loans simple with competitive interest rates. Borrow up to 85% of the value of your investment property without paying lender's mortgage insurance, and no cap on existing investment portfolio size. Plus, personal Bluestone support from application to settlement. So don't wait to unlock your future. Bluestone, award-winning home loan solutions. Find out more at bluestone.com.au/investors. Lending criteria, T's and C's and fees apply. Credit provided by Permanent Custodians Limited, Australian Credit Licence 390183.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Good everyone, how you going? Phil Tarrant here, host of the Smart Property Investment Show. Hope you're well. Remember, just as a reminder, it's out, it's there, it's ready. You've been asking for it for years. We've now made it available. The spreadsheet that we use here at Smart Property Investment to manage our own portfolio is available for you for download. This is a great initiative, and already there's people right across Australia getting access to this sheet. So this is the tool that I use to make sure I'm running our portfolio effectively. It looks at it from a debt level, a yield level, a P&L level, and also a balance sheet level. So go and check it out. It's a Smart Property Investment Portfolio Spreadsheet. All you need to do is go to smartpropertyinvestment.com.au. You see on the homepage, it's a big thing that says download the Smart Property sheet. We've done this in conjunction with our friends over at Atlas Property Group. All you need to do is click on that button and you can download the spreadsheet there. Any questions at all around it, you're more than welcome to get in touch with us here at Smart Property Investment. You can email editor@smartpropertyinvestment.com.au. It's all in there. It's all pretty self-explanatory. There's some example properties there. So all you need to do is fill in your numbers and you'll start getting a real-world picture on your portfolio. I hope you enjoy it. Remember, smartpropertyinvestment.com.au. Today, we're going to get smack bang into what is the most important component of investing in property, but something which most investors see as a reluctant component of it, and that is mortgage financing. If you've been tuning into smartpropertyinvestment.com.au over many years and following my own journey as a property investor, you know I've had a love-hate relationship with finance. It's something I need in order to grow my portfolio, but it's not the most sexy part of property investing. That said, property investing is a game of finance, and I've found, having spoken with hundreds, if not thousands, of property investors, the best investors that get the best results are those that are most in tune with securing mortgages and how they go about doing that. Something I need to work on myself as a property investor. I normally leave my administration around my portfolio is a little bit sloppy, so when I actually want to go and get a home loan, it's normally quite a painful experience. That's it. Also, it's quite a large portfolio. But my recommendation is keep connected with your portfolio, keep engaged with your mortgage interest rates. And if you're getting ready to either leverage some of the equity that you've built up over this period of time at this sort of hot market to refinance and go again, you need to understand the options available to you. We speak a lot about mortgages, the utility of finance, and how you can best shape your portfolio and your objectives through getting the best mortgages possible to suit your particular circumstances. And let's be clear, the best mortgage isn't necessarily always the cheapest mortgage. There is many, many different mortgage products available who all do very, very different things. So you need to find the one that matches you. Now, a lot of people think there's only 4 lenders in mortgages in Australia, the big 4 banks, and they dominate with the lion's share of market share. However, we're very fortunate in Australia that we've got a raft of lenders of all shapes and sizes, mid-tier banks, and also your non-banks. And today, what I really wanted to get into is a bit of a deep dive into mortgage proposition for property investors and thinking outside of the square. And that is not turning to necessarily the big 4 banks for mortgage finance. Also, how do mortgage products actually get created and how do they get priced and what does it all mean? Joining me in the studio is the head of product from Bluestone Home Loans, Luke Phan. We're going to get into this plus a whole bunch of other stuff. Luke, how you going?
Very well. Thanks, Phil, for having me on the show.
No, it's great to see you, mate. And I'll kick this off. So you're head of product, which sounds pretty important. What does a head of product do in mortgages?
Well, look, the flippant way to say is I like to say I set the rules for the products and how it works. But really, it is about listening to our customers and finding out what it is that suits their needs and bringing that back to designing the policy and the pricing that, you know, help more people own homes faster.
So you essentially make the mortgages, so the rules around them. So mortgages is a bundle of money, and where that money comes from, it comes from a whole bunch of different areas. Well, let's probably not get into that today, but you actually get a whole bunch of money together and then you lend it to people, but then you set the rules in which that is lent at.
That is correct.
Okay.
Yes.
And it's a good time to be in the business of mortgage lending or home loan lending.
Oh, it absolutely is. At the moment, I think everyone out there realizes that it's a very hot property market. And a lot of customers are in the market to find a home loan or find a home and finance that with a home loan. And so it's the most exciting time in the market at the moment.
Yeah, I'm quite familiar with Bluestone, and it's been around for probably nearing, or it's just probably marked 2 decades. But a lot of our listeners might not be familiar with Bluestone. Can you give me a bit of a 101 on the organisation?
Yeah, sure. Look, Bluestone has been around, as you say, for 20 years now. And it's a bit of a shame that not more Australians have heard of the brand. Traditionally, we did focus on what we call subprime home loans, but we now would describe ourselves as a full service home loan provider. So we have product options now that ranges from, for customers who have a clear credit record to customers who are self-employed. And also we continue to be an expert at that, credit impaired or subprime space as well. So, wherever you start your home loan journey with us, we've got a product to get you across the whole journey.
Yeah, and it's good to see that evolution of Bluestone, because when I first become familiar with the organisation, was one of the sort of new, back then it was called non-conforming lending, which means you didn't conform to the normal rules. And typically that was, someone's got a bit of a story, debt history in their past, and therefore they didn't necessarily qualify for a traditional home loan. But you guys looked at it differently. You went, oh, hang on a second, let's have a look at this person. No, they're still a good customer. There might be some stuff there in the history which isn't great, but you'll lend them money. But that said also, for self-employed borrowers, which sometimes is a little bit more complicated than those which get a pay slip, much easier to get a home loan. So you really still target that self-employed market, of which there is 2+ million people in Australia that fit that bill.
Yeah, no, absolutely. So the self-employed market is really one as market who is a bit underserved. As any self-employed borrower would tell you, there's a lot more hoops to jump through, especially with documentation. So one example I can think of is, the requirement for 2 years worth of financial statements or BAS statements.
Yeah.
And, you think about that compared to a PAYG borrower who, may have only been in their job for 6 months and just passed their probation period. That's a much longer time. That's, 4 times the amount of time that you got to wait to fulfill that criteria. And at Bluestone, we don't have that. So, we don't ask you to wait that length of time. A self-employed borrower with us can, show 6 months of BAS statements. So, very much in line with your PAYG borrowers. And we're able to do that because, as you say, we bring the expertise from assessing every case on its merit and looking at, where the customers will go in the future and be able to afford their loan rather than just purely insisting on a long history. Yeah,
and look, I fall into that self-employed area of borrowing, and I must admit, when I go for a home loan, it's a headache, right? Because just the complicated structure that exists within. So therefore, I need to turn to sometimes lenders which can look at me as a different type of person rather than just some numbers in a spreadsheet. And no doubt Bluestone is one of those organisations that does that.
Yeah. I think I'd take the opportunity to clarify one thing, which is this misperception that we are more risky in the sense of, we don't comply with the rule, or we used to be called non-compliant lending, as you might call it. That is not true. So we have the same responsible lending obligations as the conventional lenders. It's just that we apply the expertise to look at more than, just the standard set of documentation. And we, as you said, listen to every story of every borrower and take the time to assess that and not make assumptions, as some conventional lenders might.
Yeah, it's really important. And for investors, if you're really new to property investing, you get a couple of pay slips and you're buying your first investment property, non-bank lenders might not sort of fall on your radar. But I think for more sophisticated investors, and pretty much every single property investor I know have a number of non-banks within their portfolio makeup who are really important partners for their wealth creating journey. Because with some of the big banks, for example, you might get tapped out at the point in time in terms of your debt levels where they start viewing you a different way. So my message is you should be considering non-banks as property investors whenever you're looking to grow your portfolio or refinance your portfolio. And to Luke's point, a lot of these sort of traditional non-banks like Bluestone started off now are just like every other lender. You've got products which are comparable to what you would get at any of the major banks, and they're probably price competitive as well, aren't they, Luke?
Oh, yes. So our product range starts with what we call our prime product, which, is what you think of as a conventional lenders kind of type product for customers with very clear records. And, in that space, Bluestone at the moment is offering lending up to 90% the value of the property without lender's mortgage insurance.
Okay.
So, within if you're buying the Sydney or Melbourne or Brisbane metro area, that could be saving you, somewhere like 1% to 2% of the property if you're not paying lender's mortgage insurance there. So it's definitely a very competitive offer, and you just need to look beyond the traditional set of products to find such things.
So that's your job as head of product then, to make these rules around borrowing. So what you're talking about there is a 90% LVR, so you can borrow 90% of the value of the property. So simple numbers. And Luke, you're probably much better at this. It's $1 million property. You can borrow $900,000 and you don't have to pay LMI, lender's mortgage insurance, which is an insurance premium you pay to the lender just in case you default. So that's completely waived, isn't it?
Yeah. Well, on the that example that you gave, I've seen lender's mortgage insurance premium quotes for as much as $18,000.
Wow. On $900,000. Yeah.
And that's something that, these I know it's usually capitalized and people don't think about it, but it's $18,000 worth of debt that's sitting there. So if you can avoid that up front, I think you could be in a better position.
Oh, yeah. I might have to look at that product myself for some stuff I'm about to do, Luke. But these are like the really interesting stuff. So a home loan isn't just a home loan. And I made that point beforehand. A lot of the biggest mistakes I find that property investors make is that they just chase the cheapest rate. And typically, Luke, and you could probably talk to this, the cheapest rate is usually the least flexible product in the market. So you need to really understand what you're trying to achieve, and you might want to or need to pay a bit of a premium in order to get the flexibility you want. And often non-bank lenders are those that can provide that. Are you enjoying your job, Luke? You like sort of manufacturing mortgage products and being the maker of the rules?
There's a part of me that is really much relished the making up the rules bit and then being controlled. But I got to say, it's a lot of time I feel that it is serving the needs of the market. So listening closely to what the market is saying and responding to that. So I feel sometimes that it is about being a servant more than being in control.
And you like working with property investors?
Absolutely. So I'm a property investor myself.
Okay.
So I've got to use the products that that sometimes I create the rules for. But I got to say it's right now the market is very hot. Like everyone knows that, and it's really important that for customers to get onto the market quickly. We hear that a lot from our borrowers. And I would say, looking beyond the traditional set, not looking for the cheapest home loan, as you say, can often lead you to getting onto the market faster because you're not waiting to fulfill all the criteria for that really cheapest rate, but which are really inflexible.
Yeah, and that is the key point, and it's a really good one that Lucia's made about mortgage finance should be an enabler for you to support your portfolio makeup. Moving fast often is better than taking time to get the cheapest rate possible. And even if you sit around for 2 or 3 months in this particular market trying to hunt the best mortgage rate, what you might save in terms of the long tail of that home loan and the interest you pay on it versus the capital growth uplift you can get by being in the market quicker without paying LMI potentially can far outweigh that. So you need to be thinking this way when you're going about securing mortgage finance. Don't have your blinkers on thinking that the interest rate or the actual interest rate is the most important part. We talk a lot about this on smartpropertyinvestment.com.au. You only look at my own portfolio and people say, oh, Phil, well, you're paying sort of quite a lot more than what you can get with lender X or Y, but the flexibility I have with my current setup works for me. Now, look, I want to talk about the sort of the speed of change in the market and potentially for what will happen with rates in the future. We'll just go to a break beforehand. Stay with us, back in a moment.
Whether you're a seasoned property investor or about to buy your first property, finding the right investment property to buy in 2021 isn't easy. Why do it alone when you could partner with award-winning buyer's agent Paul Glossop? Over the last 10 years, Paul has helped hundreds of clients build multi-property portfolios. Paul's secret is finding off-market bargains that get snapped up before the general public even gets a sniff. Interested? Head to purepropertyinvestment.com today to schedule a strategy call with Paul Glossop.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show. I'm with Luke Phan. He is the head of product at Bluestone Mortgages. You can go check these guys out, bluestone.com.au, non-bank lender, but they do absolutely everything for property investors, from your low doc stuff, alt doc, credit impaired, for self-employed, all the way through to prime-based lending, one-on-one, competing with the major banks. Now, Luke, you're already seeing it now. Banks are sort of already tinkering with lifting interest rates. You'll see CBAs come out. They moved, I think, last week or the week before on jacking up rates. You know, I've got some loans with CBA and I'm actually going through this right now, but what can investors do if the investment loan is coming to an end, whether it's their interest only period or they're coming off some sort of other restrictions on it? What should they be looking at non-banks like you for potentially refinance?
Oh, definitely. Look, I just want to make a little comment on that. Interest rates going up. Personally, I see that's a bit of the taking a silver lining out of that is that, people are thinking the economy will recover in a few years, which is, always good for us investors. So I'm not too worried about that. I'll take the silver lining where I can take it. But yeah, definitely, if your interest only period is coming to an end, then it's an opportunity really for you to review your portfolio and see what is the best product, what is the best option for the next chapter. And sometimes that could mean moving to a principal and interest repayment, right? Like we know that most of the time the rates with a particular lender is cheaper when you move to principal and interest. And that could be taking the chance for you to lower that LVR, paying off more of that principal, right? So don't forget that's an option. But generally for investors, we like our interest only terms. I know that with many lenders, there's a maximum interest only term. And if you've reached that, then definitely it's time to see if you can refinance with someone else so you can continue that structure as it suits you. And refinancing with a non-bank lender is something that should be on your radar. You might be very surprised to find that we're very competitive on rates in the investment space. And that, it's an option that will also allow you to think about where you want to grow your portfolio next as well. So again, it's not just the interest only period, but if you're looking to buy another property and your current lender, is, I guess, not willing to go on that journey with you, then us in the non-bank lending and Bluestone home loans in particular could help you continue that journey.
Yeah, it's well worth considering. And I've had a lot of loans in the smart property investment portfolio have come off interest only and now P&I, and I sort of look at them and think, I've got to refinance, but I've got to get everything sorted out. And there's a whole bunch of stuff coming up to the end of the term of the interest only. Back in the day, you could just sort of extend it, right? But now it's a full new application. You used to be able to call out your bank and say, I want to go interest only, stay on interest only. And they go, no worries, but you've got to do a whole new application. So you've got to do it anyway. So it's worthwhile considering whether or not refinancing those loans with another provider is worthwhile. Now, considering the current market, Luke, what are the sort of non-bank lenders out there providing for investors specifically for, to capitalize on a hot property market? You talk about speed, right?
Yep.
I imagine that's probably a big driver for people turning to Bluestone.
That is a huge driver. What we're hearing from our customers is that speed to market is really important to them at the moment. There are stories out there, people missing out on a deal because their current lender could be taking 3 weeks to look at the application. And that's not more, the faster ones. I've heard horror stories. At Bluestone, our service levels, turning around applications within 48 hours. So if you see a property, that you're interested in midweek and you want to make an offer, usually Saturdays when we go and make offers, you can do that with Bluestone. And there are many lenders out there at the moment who can't say the same.
So I want to chat about this a bit, and I've got a bit of being my bonnet around at the moment because some lenders, major banks in particular, are taking a long time to approve finance. And there is also a big disconnect between those investors that use a mortgage broker versus those that don't use a mortgage broker. Those that are going through the direct bank channels are getting a much better, speedier outcome versus those through the broker channel. And we'll chat a little bit more about that into the future, but there's a big disconnect there at the moment. But you're talking about here speed to capitalize on opportunities through 48 hours. On that basis, I would assume now you need a whole bunch of information in order to give an indicative approval within 48 hours. How much info do you need in order for that to take place?
Look, as I say, we got our, responsible lending obligations, and what we need is, enough information to assess and make sure that you can repay the loan. Like, it's not in anyone's interest for anyone to get into trouble when they take on debt. But, with our experience in lending in, very difficult circumstances, we have reduced that amount of, documentation requirement as much as we can to, where it is reasonable. And we believe that's what is keeping our edge in being able to approve things quickly, but, maintaining a very safe portfolio as well. Yeah.
Yeah. And having done this for many years as a property investor myself, but also speaking with many, many property investors, speed always trumps product is my view. And as long as the product is reasonable for your needs, but you can be very strategic and tactical about that as well. So if you find a property, you probably want to get it off the market pretty quickly, because guess what? There's probably someone else out there who will buy it and maybe compromise your ability to secure that deal. So if you can get fast, speedy, approved finance, that's a huge enabler. So over 48 hours, will you give it like a pre-approval saying, yes, if you buy that property, we will fund it, essentially?
Yes, essentially.
Yeah.
We've gotten to, if you've found a property already, we've gotten to, final approval on that. So yeah, you just need to buy it and sign the contract.
Okay, you might be hearing from me because I need to move a lot faster. So why is it taking the sort of mainstream lenders so long to sort out approvals?
Oh, look, I've
Don't
been
want to go into
speculating.
it, yeah.
I say anything there, but I would say it's Bluestone, we're committed to our broker partners 100%, and we work very closely with them. So, first thing to do would be, work closely with your broker, or, if you want to talk to us, contact us directly. That's fine too. But having said that, it's keeping that close relationship with brokers allowed us to work through deals and, work through scenarios quickly. So before, our brokers partners submit an application, they can talk to us and work through scenarios.
Yeah.
And, we can therefore not waste anyone's time, sitting around waiting for information, and we can just keep the communication flowing.
Well, I can speak from experience. Brokers don't want to waste anyone's time. Lenders don't want to waste anyone's time.
That's right.
Investors don't want to waste anyone's time because it just clogs up the system. So if you have a mortgage broker, make sure, ask them, are they considering non-bank lenders as part of it? And any good broker, in my view, will first of all try and understand what you're trying to achieve as a property investor before they even start thinking about recommending products, and they're obliged to do that. So if they know you want to move fast, they should definitely have lenders like Bluestone as part of their product panel, so they can be an enabler in that regards. But I'm obviously a pro broker sort of guy, or every loan I've got is through a mortgage broker, but people can just contact Bluestone direct as well. Investors can give you guys a call or go to your website and do all that sort of through a direct channel.
Yes. So, bluestone.com.au, you can contact us directly through there as well. That is an option.
Yeah. And let's talk about options. We're chatting about before how the product itself, rather than the interest rate, is probably the key thing you need to be considering as a property investor, i.e. how does it fit in with your particular investment strategy? It might be flexibility, it might be offsets, it might be fixed and variable. There's a whole bunch of different ways and different sort of factors or features of a home loan which will suit you. And often the more features typically means sometimes a higher interest rate, and that's the payoff for flexibility. Now let's have a chat about what home loan options non-bank lenders like Bluestone Mortgages provide that sort of conventional banks might not necessarily think about or have on their books.
Yeah, I think we mentioned one before, and it's worth repeating again because it's how important it is, which is the alternative documentation, the alt doc, as we call it, options for customers who are self-employed. So, in that space, as we said, some conventional lenders might require 2 years worth of records before they look at your one. Whereas, with non-bank lenders and Bluestone in particular, we are willing to accept 6 months of business statements of past activity. And on some of our product, we also have the options of, accountant's declaration. So these are things that help customers to get to the market faster and not wait that extra year and a half to build up a record, if you will. The other option is, of course, our specialist lending products. That's for people with, some credit impairment in the past. And that, could mean that the conventional lenders will not look at you at all, as I understand it. But with Bluestone, we look toward the future. So, we acknowledge that there's, slight blemish on your record, if you will. But the main question for us is, can you service the loan going forward? And that's what we want to work with you on. What's your journey going forward? And your history is, not as determinant, if you will.
Yeah, and that alt doc, just chat about that a little bit, Luke. So this is essentially for property investors, and you might run a great business, but you might not necessarily have all your paperwork in order, or it's complicated, or it's too hard to get done, or it's just the breadth of it is too wide. So this is where your accountant, who might have been a partner of yours for many years, will pretty much say to Bluestone, hey, this guy or this girl or these people, they're all okay. It's just too hard to get their financials sorted out, but it's an endorsement that from the accountant that you have the capacity to service a loan. That can really make things a lot faster, can't it?
Yeah. I mean, many businesses lodge records with, the ATO, for example, every year. Now, depending on what time it is a year, you may not have that or that record ready yet, and that's where we rely on the experience and the expertise of your accountant who's been working with you, as you say, for some time, to then say to us, yes, this is a viable, ongoing business and profitable. And that we rely on the professionalism of the accountant and in doing that. And, that's the kind of expertise that we have to work with accountant.
Yeah. And most accountants I know who have a good relationship with their clients are happy to provide that sort of service to support lending, and for self-employed people, it can be tough. I'm going to chat that through a little bit further. We'll just go to another break. Back in a moment.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with Luke Phan. He is the head of product at Bluestone Home Loans. You're going to check these guys out, bluestone.com.au. It sounds like they've got some really good products there, and also attitude and aptitude for supporting property investors. We're chatting about self-employed before we went to the break, and it can be a lot more complicated for them. And I speak from experience on one of them. What sort of other key challenges are they facing right now, and how is Bluestone working with these type of investors to make sure they can get them into finance as quickly and seamlessly as possible?
Look, I think we all acknowledge that 2020 was a difficult year for a lot of businesses. And, as a result, you may have had some blemishes on your record, if you will. That is something we are working through very closely with all of our customers, including prospective customers, and trying to understand what is the real impact. And for a lot of cases, we would say the impact of COVID-19 has been temporary. And we're willing to accept that. You can demonstrate that you've recovered from that, then, we're happy to continue, if you will. And that is something that's really important. I think you can encounter conventional lenders who have inflexible rule when it comes to temporary, blemishes on your record. And that's not really helping you going forward. So at Bluestone, we can do that.
Yeah, and that's a really pragmatic way to look at it. And I know a lot of businesses that struggled through COVID-19, despite the fact they were very good businesses pre-pandemic, and no doubt post-pandemic, they'll be good business again. So, having some flexibility there so a lender can view you as a person rather than a number. How do you go about sort of assessing people's ability to secure finance? Is it do you credit score or use this HEM type thing that everyone talks about, or do you sort of look at it differently?
So we don't use credit score.
Okay.
I think that's, boiling it down too much into just one number. We do look at all the actual income that you get in. So any information that you can give us to support that income that you see going forward, we'll listen, really. It's as simple as listening to what the borrower's telling you and not having, assumptions and presumptions going into that conversation. In regard to expenses, yes, there's, if you show us what your actual expenses, we consider that. If you say to us, that we think it's, average HEM kind of thing, we can use that too. So again, it's about giving us enough information to see that you can service the loan. And we do have some set requirements as to, what the documentations are, but we keep on emphasizing to all our brokers and our prospective customers, tell us the full story of what you would like us to know about yourself.
Sounds like you're one of the few lenders that treat people as humans rather than as just numbers aligned on a spreadsheet.
And that is so especially true for self-employed customers. Every business is different. And so it's important that we take the time to listen to that and then arrive at we're able to make the quick decision after you've submitted your application because we've had that conversation with you. So
Bluestone's in the business of lending money, and obviously you make money because you lend money, and that's how banking and finance works. But as an asset class, property, you must have a lot of confidence in its long-term performance in Australia because that is what the finance is secured against as collateral. So what's your sort of views for property investors moving forward? What sort of trends are you seeing? You're happy to still back Australian property, which is a good thing. What's going to happen?
Look, one significant trend that we're seeing, and this should come as no surprise to anyone, is the preference for people to live further away from your traditional, CBDs. And that's as a result of, COVID-19's accelerating a trend that was already there, which is more companies being flexible with their working condition. So we don't see that trend reversing. It's going to stay the way it is. We believe it's going to stay the way it is. In fact, 1/3 of our investment properties is now in what you would classify as non-metro. Okay. And that's been a significant move. And it's actually quite a good time to invest in those areas, because a lot of people who are thinking about living further away from the city are choosing to rent first to see if they can actually, change that lifestyle.
Yeah.
And we're seeing rental return really increasing, outside of the metro area. So again, that's a trend that I don't think is going to reverse. And I think that's something that we would look to support even more. So, don't be surprised if you see Bluestone start to support even more this, lending in the areas that are further away from your traditional CBDs.
And again, that's one of the benefits of non-bank lenders like Bluestone. Some of the sort of big banks will go, no, we don't lend in these locations, or we won't lend in high-density apartment blocks, or do it up to a particular thing. So you're a lot more flexible, you're a lot more fluid to actually be responsive to the market as it sits right now. It all sounds pretty interesting. It's you got how often are you making new products or tweaking or responding to the needs of investors?
Look, our brokers complain about this. We can tweak a bit too fast. Yeah. So, you can see changes coming from us in terms of tweaking things, even monthly, sometimes depending on the market needs. In terms of new product, look, I'm going to say it now, expect new things from us every quarter. Okay. Coming up in the next couple of years. And that is, because we've done a thorough analysis of how things have changed, as you say, the market trend and all that. And we're also looking at new customer segments that we want to get into. So, expect more from Bluestone.
Oh, that's really good to hear. And I must admit, I've never really been comfortable with the term non-bank. I don't necessarily like it. And for those of you who aren't sort of familiar with, you have the major banks, then you have second-tier banks. I don't really like the term second-tier banks. And by second-tier banks, you're talking about sort of Suncorps and Macquarie's and AMPs and those type of, but then non-banks, as in it's not a bank, but a sort of financial institution. And then you got mutuals and, all the sort of stuff. But I don't really like non-banks, but as a term that is part of lexicon now, do you think it'll change in time, towards, because essentially $1 is another dollar. So you're still a full service type organization, aren't you? You can correct. Borrow normally.
That is correct. Look, the non-bank, I think, simply refers to the fact that we don't offer, everyday banking services.
Yeah.
But from a home lending point of view, that's where we focus our business. That's where we build our expertise. And now we service the full spectrum of customers, so we can get you onto your property ownership journey earlier. And that's why that's a good term. Full service is the term that we prefer.
Full service. And that's great. Well, thanks for coming in, Luke, and sharing some of the work that Bluestone's doing right now. So you're happy to someone to come through a mortgage broker or come direct? Doesn't matter?
It doesn't matter. We don't differentiate in terms of that. We provide great service in both channels. And thank you. Thank you for having me on the show today.
No, really good. That's Luke Phan. He's the head of product over at Bluestone. Go and check these guys out, bluestone.com.au. Ask your mortgage broker about them as well. And if you sort of need more info around non-bank lenders and how they work, I'm sure your mortgage broker can help you understand that a little bit more. My message would be that flexibility is key. So you need to make sure you're choosing the mortgages which best suit you. And most investors I know are looking for flexibility. They're looking for speed. So if you're not considering non-bank lenders like Bluestone, get connected and find out what's happening. I like talking about mortgages. We're going to be doing a lot more of it moving forward, because if you want to be good as a property investor, you need to be right across it all. So open your awareness towards it. We write a lot about it on smartpropertyinvestment.com.au. So you go and check it out. If you're not yet connecting with us on social media, make sure you do. Smart Property HQ is where you'll track us down. And any questions at all around mortgages, we're happy to get Luke back in. He can answer some questions. You can email the team, editor@smartpropertyinvestment.com.au. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Bluestone makes investment loans simple with competitive interest rates. Borrow up to 85% of the value of your investment property without paying lender's mortgage insurance, and no cap on existing investment portfolio size. Plus, personal Bluestone support from application to settlement. So don't wait to unlock your future. Bluestone, award-winning home loan solutions. Find out more at bluestone.com.au/investors. Lending criteria, T's and C's and fees apply. Credit provided by Permanent Custodians Limited, Australian Credit Licence 390183.